My name's Oscar. I do accounting at BloFi. I come from a background of owning my own businesses, failing a couple of times, getting back up every single time, and just trying to analyze and see how things went wrong and how to fix them. What I do now is I help business owners also not navigate through those mistakes and make sure they don't fall and trip. Uh, I come from an entrepreneurial family, and I've known how the business is from the beginning, from the good times, the bad times, the stress, and the uncertainty that it can come with. So now what I like to do is I like to help as many business owners as I can. I know everybody's taking a leap, so if I can guide them with a little bit of experience, that's what I enjoy doing. Cash flow is the most important part of the business. Without cash flow, the business will not survive, no matter what your P&L tells you, no matter how much your sales are going. Sometimes having a lot of sales and a beautiful looking P&L means nothing whenever your cash flow is not there, meaning you can't fund the production, you can't fund the marketing, you can't fund any of that. And you're sitting there and just looking at your P&L thinking, what's going on when I'm showing all this profit, but I can't afford to pay my bills. So essentially cash flow is the most important part of the business. And a lot of the business owners get it wrong because that's the last thing they look at. They always want to look at how they're performing, how much they're selling, and how much they're growing per month. Business can be profitable on paper, but they cannot be profitable on cash flow. And the easy way to look at that is whenever you're looking at accruals. Today you sign a PO to a major vendor, and you just recognized 300,000 of sales, and you shipped out 300,000 of sales, but then you're not getting that money until 45 days, 60 days. But at the same time, you also just have to pay your co-packer another $150,000. You have to pay your salaries, your rents, and everything. So essentially all the money in your bank account is negative, and you have $300,000 worth of receivables. So while your P&L looks amazing because you recognize the sale and everything, your cash or your bank account looks empty because you spent all your money before you receive it. Forecasting cash is a special topic. It all depends on the type of business and the nature of the business you are in. For businesses that have been around for a long time and they're mature and they have some sort of stability, some sort of recurring revenue, it's easier. You can just forecast for the next 12 months or the next 18 months, sometimes even up to 3 years, depending if you can look at historical figures and you're not growing or dipping that much. For up and coming businesses or businesses in the growth phase, it's a little different. And I like to take the approach of forecasting 3 to 6 months in advance because you don't know if the efforts you're doing right now mean that you're going to have a pop in sales and then the next one's going to drop. So you just got to be prepared to be able to fund all that growth at the same time. So it's a very dynamic process that you have to tailor it exactly to the business and the business stage they're in. If I told you how to get cash in the fastest way, I'll probably be lying to you and I'll be acting as a genie. Every business is different. You can't really come up with cash fast. You have to analyze the situation and understand where the cash is leaking, why you don't have cash, and fix it. If you don't have cash and you need cash right away and you realize you have a bunch of receivables, then you might not want to do this, but you have to go factor out your receivables to get some of that cash in. If you're in a service business, we'll maybe running a promotion that gets the hook for people to start booking you or something to do that. So in reality, getting cash fast, there's no easy way to do that. You can aggressively chase invoices you have outstanding or something, but it really depends on what type of business you are and what is the cash struggle. There's not a legit straightforward answer on how to get the money cash. It all takes planning and it's on the spot. You have to come up. The problem that most industries share is the lack of planning. So a lot of business owners, they don't plan how their cash is going to behave. And as a business owner, you're always looking for the next opportunity. And you want to jump into that opportunity, but you don't know, or you don't plan what you have ahead. So the common mistake a lot of people do is they go look at the bank account and they see they have $100,000, so they feel confident they can make that move. But at that time of the moment, they forgot that they had these payables coming next week. They had other bills outstanding. So when it comes to that, they always go into the cash crunch just because they try to hop into the opportunity. So Majority of the business owners, the problem they face is they have too many opportunities in front of them and not enough planning to see which one will actually benefit them and which one will affect them. Building a team is the most important part of a business. It's your employees or your teammates are your biggest assets in a business. As an owner, as a CEO, as a founder, you only have a limited amount of hours per day to make things happen. And if you don't have the ability to build a team and you don't know how to delegate the work, your business will always be in the same position. You'll never be able to scale. You'll never be able to make better decisions. And having a team just challenges the way you think, challenges the way that decisions get made, and challenges the way that the business is ran. Whenever you have an actual team, whether it be internal, external, you're able to jump ideas and make the better decision out of all of them. So having a team just opens up the majority of your time to the higher priority or the critical items you need to work on. Pricing or margins is a very sticky topic. It always happens whenever you're opening a new business or whenever you're looking into expanding into a new line. So the problem a lot of people do is they want to get those sales because they already spent the money on the infrastructure or the investment they have to make for the product. So they'll start with their sales very low. So whenever your sales price is very low, what happens is, you get a bunch of sales, but as soon as you start adjusting your price so you can actually start making a margin, all the sales progress you made, you start losing it because some people are not going to stick around. They're just going to go away. So what do you want to do whenever you're looking at pricing or margins? What I like to do is I like to think ahead and say, in 6 months, if everything in the sales, I'm not worried about the sales. If everything's going correctly, where do I need to be? How am I covering my fixed expenses, my variable costs? How do I have extra money to invest? From there, you can work backwards to try to figure out where you need to be at. So once everything starts going, you don't have to do a price increase and break off all your existing clientele. It also helps you whenever you get to the 6-month mark and you realize it's like everybody's buying my product at this price. Then instead of raising that price, you can launch a secondary line and then fix with the pricing on that and keep increasing so you have tier systems into your business. So pricing and margins are something you have to think 6 months to 12 months ahead on how it's actually going to benefit your business or hurt your business. So it's one of the stickiest situations you have in every single business whenever they're trying to launch a new product or whenever they're trying to expand into different areas. The cash flow habits that separate the business owners are very clear, and it's only one. It's called planning. Whenever a business owner plans, that means they're looking ahead into the business. They're not just looking backwards. And if you're looking backwards, you're never going to get a night of sleep because you're always going to be tight on cash. Sometimes whenever you have your planning, you know that next week you're going to be very low in your bank account. You're going to barely meet payroll. You're going to barely meet things, and you can mitigate the one-offs that come up and try to make sure they don't hunt you at night. Whenever you have no planning, you're always worried about what's going to happen. So the number one thing is just planning, and that's what makes the difference between a business owner that can sleep and a business owner that can worry all night. Having a bookkeeper by itself stops you whenever you're actually trying to grow or scale the business. Having bookkeepers read you the past and the historic items, yes, they can kind of tell you what could happen in the future, but their job is not to help you lead or guide the company. Their job is just to tell you what the historic performance was. So that's it's a very straight line where once you start actually growing or expanding, scaling, you start needing different type of services just so they can help you and bring the other scenarios, risk management, whatever you may need to actually get to the point where you need to be at. If you wanted to get along with or get through just with a bookkeeper, what's going to happen is you're going to stay at the same spot. And whenever you make a decision, you're going to have to go back to the spot you were just because you didn't have every single scenario or every single variable planned into your execution plan. So working through acquisition, sales, selling personal business, everything, what it's taught me is that the most important part of the business is not your product. Your product is kind of one of the last things that your business actually has importance in. Your number one priority should be creating systems, creating workflows, creating things that can operationally withstand test of time, whether you're in the business or not. If you're able to walk away from your business for 6 months, go on vacation, your business still running and growing, your business is worth something. If your business is dependent on the founder or the CEO to make every decision, then at the end of the day, you don't really have a business, you have a hobby that makes you a little bit of money. So working with businesses that are in Spanish, English, they come from different cultures. In reality, it's the same thing. You see the same thing between both businesses, and it's actually funny because you would think different cultures carry different ways of thinking or anything. The only way they differ is just the risk. I've noticed that my English speaking clients, they're more risk adverse and they want to think slowly and build the foundation. And then they don't care about if it takes 10 years to get where they need to be at. They're going to take one step at a time. Whenever you're going with the Spanish speaking Hispanic culture, they know they want to buy a Ferrari next month. So they're going to throw everything at the wall and make sure that they're going to get there as fast as they can. So they take more risk. Sometimes they pay off, sometimes they don't pay off, but that's really just the difference. It's just the risk tolerance they have. Some cultures some cultures have a little bit different than here where we have stability, some countries don't. So it's like they're always just trying to get ahead of the game. And they're just great people to work with. Philosophy is, I want to teach you, not do all your work. The reason for that, it goes both ways. So if I'm working with a business owner that I have to do every single thing for them, then in reality, I'm running the business for them. And that's not my job. My job is to help them with the accounting or the financial work and make sure that they're able to succeed. So teaching them allows me to step back from the business a little bit. And then at the same time, I also run a business. And if I was doing all the work for every single client, what I would do to myself is I would limit the amount of time I can work with different clients. So by teaching the business owner how to do it, it's not saying I'm not going to do your work. It's just educating so you can also catch mistakes or you can make decisions without having to get on a call with me and figure out what to do while opening myself more time to continue growing my business. Part of getting the cash flow under control is finally seeing the face of satisfaction, happiness, hearing the stories of what they were able to achieve. Whenever you work with a lot of business owners, a lot of them take a leap from corporate America to go into betting on themselves. What a lot of people don't realize is that whenever you're working a 9-to-5 job, you're working 40 hours a week. Whenever you're a business owner, you're working 24/7. And it comes with a lot of sacrifices. And you can see from working with them in the beginning, it goes from the stages of happiness, excitement to just being brought down, feeling defeated, being devastated just when something goes wrong. Whenever you get all their cash flow and their business under control, then you start seeing them start flourishing again, being happy, taking those trips, taking care of their family, and then scaling up fast and growing. Sometimes you go through all these things and it feels like it's your own company whenever you're doing it. So the business owner is not always going to tell you, thank you, you helped me get this. But it's like, as soon as you start seeing those changes, it just makes you feel great that you're able to teach another person and now they're able to continue growing or help their family in the ways they've always wanted to do it.